Welcome to the Opening Bell Report.
It is Wednesday, January 28th, 2026, and if you've been watching the markets today, you probably did a double take.
Oh, at least. Maybe a triple take. It's one of those rare days where the market just decides to rewrite the rulebook in a single session.
We are talking about SanDisk, of course, ticker symbol SNDK. For years, really, there's been this huge invisible wall at $500.
Ceiling.
It was the ceiling. Traders saw it, the algorithm saw it, and the thinking was always, okay, that's the limit.
That's as good as it gets. But today, well, that limit didn't just break.
It evaporated.
Yeah, that's the word. It's gone.
Exactly. We've got a new analysis report here called The $500 Resistance is Gone. And that's our mission today. We're not just here to, cheer for a stock going up. We need to dissect the anatomy of a move like this.
Right.
Because when a company this big moves 10% and shatters a ceiling like that, it's usually telling us something much bigger.
It's telling us about a shift, not just in the chart, but in the fundamental story. And it's actually pretty rare to see the two line up so perfectly.
How so?
Well, usually you get a technical breakout on, no real news. Or you get great news and the stock just kind of sits there. Today, with SanDisk, it was the perfect storm. You had a textbook gap and go setup.
And that's the technical side.
Right. And that collided with this huge market awakening to something called the AI storage trade.
The AI storage trade. Okay, we are definitely digging into that because I think a lot of people have been so focused on the chips, they've missed this part of the story.
Completely.
But before we get to the why, we have to talk about the how. The price action today was it was something else.
Let's start with that number. $500.
It's a nice big round number.
Yeah.
But why does that matter so much?
It matters because, well, humans are still in charge, mostly. We're just wired to see round numbers as significant. It becomes a psychological ceiling. In trading, we call it resistance.
So basically, every time the stock got close to $500, people would just hit the sell button.
Exactly. For the last, 18 months? Anytime it got close, a wave of selling would just come in. People think it's too high, let me take my profit, or they worry about a fake out.
The fake out fear is real. Nobody wants to be the one who buys at the absolute peak.
Nope. But the report points to something really specific about this morning that shows this was different. It says SanDisk didn't trade through 500.
What does that mean?
This is the crazy part. At the opening bell, SNDK's first price was $500.10.
Wait, so it literally just skipped the hard part.
It bypassed the resistance entirely. It's what analysts call a breakaway gap.
Okay.
Think of it like a locked door everyone's been banging on for years. Instead of breaking it down, the stock just poof, teleported to the other side before the market even opened.
That's a powerful image.
Yeah.
So the overnight demand was just so intense.
So intense that the fight was already over. And that signals agency. That tells you the institutions, the big money, they weren't waiting around.
They wanted in.
They wanted in, and they were willing to pay up to get in right away. They forced the issue in pre-market.
Okay, here's the test, right? When something gaps up that hard, doesn't it usually fall back a bit? People taking quick profits.
That's what you'd normally expect, yeah. You'd look for it to fill the gap, maybe drop back down at yesterday's close. But look at the low for the day in the report.
I'm seeing it here. The low was $499.15.
Think about that for a second. It opened at $500.10. It dipped, 95 cents? It barely even kissed the $500 mark before buyers just flooded back in.
Wow. That's incredibly strong. It's like the market just tapped the floor once, said, yep, it's solid, and then took off.
Precisely. That is the moment where the psychology inverts. The old ceiling, that concrete barrier, it instantly flipped into a new floor, into support.
And the rest of the day, the report calls it a sustained ladder climb.
Yeah, it wasn't a messy, choppy day. It was just a steady upward march. That's institutional accumulation. You don't see a chart that clean unless the big funds are buying all day long.
And it closed at $527.63, up almost 10%. The high was even higher, near 531.
And the volume. The report says the volume was undeniable. You just don't get a move this big on a stock this size from, people on their phones. This is big money repositioning. They're voting that 500 isn't the limit anymore.
It's the launch pad.
It's the launch pad.
Okay, so that's the what. The chart is screaming that this is real. But now we have to get to the why. Why now? What's this AI storage trade?
This is the fundamental piece that finally clicked for the market.
We've spent the last couple of years talking nonstop about GPUs, right? NVIDIA, AMD, the brains of AI.
Right. Everyone's been buying the brains. We're building these incredibly fast data centers. But here's the thing everyone forgot. All that data has to live somewhere.
It can't just float around in the cloud.
Exactly. And for a long time, data centers used traditional hard drives. HDDs, the spinning magnetic disks. They're cheap, but they are so slow.
I remember that sound from old computers, that click and whir.
And that whir is the sound of a bottleneck. When you have an AI model trying to pull huge amounts of data in a split second, that spinning disk is like putting a lawnmower engine in a Ferrari. The GPU is just sitting there waiting for the hard drive to find the file.
So the market woke up and realized SanDisk isn't selling capacity, they're selling speed.
They are selling the solution to the bottleneck. The report calls SNDK a pure play on high-speed data center flash storage. This isn't about your camera's memory card. This is enterprise-grade stuff.
And do the financials back this story up? Because, narratives are great, but we need the receipts.
The receipts seem to be there. The report cites revenue growth accelerating to 23% year over year. That's huge for a hardware company this size. And it says cash flow is massive.
So they're actually making money, a lot of it.
They are printing cash.
But let me play devil's advocate. A 10% jump, all-time high. I have to ask, is it too expensive now?
That is the big question, isn't it?
The report breaks down the valuation. At this price, with forward earnings estimates around $13.25, that's a forward PE of about 40.
It is. And a 40x multiple is, well, it's not cheap. That's what you normally see for a high-growth software company, not necessarily a hardware company.
So how on earth does the market justify that?
It's the premium for growth argument. The market is betting that we are in the very early stages of this whole AI build-out. They see SanDisk at the center of the hottest sector on Earth.
Okay.
So they're willing to pay a premium because they think those earnings estimates, they're actually too low. They're betting that 23% growth is just the beginning.
So they believe the E in that PE ratio is about to explode higher, which would make today's price look cheap later on.
That's the bet. When you're solving the biggest bottleneck for the biggest trend in tech, the old valuation rules, they kind of go out the window for a while.
That makes sense. And it brings up the competition. SanDisk isn't alone here. The report compares them to Micron and Western Digital. If this AI tide is lifting all boats, why is SanDisk the one getting all the attention?
It's a classic case of pick your fighter, and the report is pretty blunt about the differences. Let's start with Western Digital, WDC.
The report says they're weighed down by legacy tech.
Right, WDC is huge, and yes, they make flash storage. But they also have a massive business in those old spinning hard drives. That business is basically stagnant. It's an anchor.
So even if their flash business is growing, the old tech is just dragging the whole company down.
Exactly. SanDisk doesn't have that anchor.
Okay, what about Micron? Ticker MU. They're a big name.
Micron's a great company, a titan. But their business is heavily tied to DRAM memory, which is famously cyclical, and they're really exposed to PCs and smartphones.
Meaning if people buy fewer iPhones this year, Micron feels it.
Yes, they're tied to the consumer economy. SanDisk, in this new narrative, is being viewed as pure infrastructure.
The report calls it the focused, high-octane racer.
I love that line. It's streamlined, it's aimed right at the data center. And that's why the market gives it a higher multiple. You see, that price-to-sales ratio is almost 10.
So investors are paying more for the pure story.
They're paying for purity and for speed. They don't want the smartphone cycle risk. They just want the AI data center growth. And right now, SanDisk has the cleanest story with the fastest growth.
Okay, so we've smashed the $500 ceiling. We get the AI bottleneck story. Now, what's next? The report uses a phrase that always gets me excited and a little nervous. Blue sky territory.
It's a great term. It sounds poetic, but it's a real technical condition.
What does it mean for someone watching the stock now?
Blue sky territory just means the stock is at an all-time high. There's no price history above $531.
So there's no map.
Exactly. Normally, you can look at a chart and say, oh, back in 2021, a lot of people sold at this level, so that's resistance. But here, there are no reference points. Everyone who owns the stock right now is making money.
So there are no bag holders, no one who's just waiting to sell to get their money back from a bad trade.
Correct. And that creates a unique psychology. The stock is trading purely on future expectations. The sellers dry up because they want to see how high it can go. The sky's the limit.
But it has to stop somewhere, right? The report does mention some targets.
It does. The bull case says momentum could carry this thing up to the street high target of $580 pretty quickly.
That's another $50 from here, another 10%.
Which, after seeing what it did today, doesn't seem that crazy. When a stock enters blue sky, it often overshoots.
But we have to look at the other side. What's the bear case? What's the risk here?
The risk is a profit-taking pullback. You have traders who are sitting on huge, fast gains. Some of them are going to sell, and if enough of them sell at once, the stock could drop.
So if you're watching this tomorrow or next week, what's the one thing you need to focus on?
The report is crystal clear on this. Watch the $500 level.
The old ceiling.
It has to become the new floor. That's the golden rule. As long as SNDK stays above 500, the bulls are in complete control. If it pulls back to, say, 505 and bounces, that's actually healthy. It confirms the breakout.
But if it breaks back below 500,
Then you might have a problem. That would look like a failed breakout, a fake out. But given the volume and the story, the report's conclusion is that 500 is history. This breakout is real.
so to wrap it all up, we're looking at a perfect storm.
We really are. You've got a technical breakaway gap that just obliterated resistance. You have a fundamental story about AI storage that the market is finally buying into.
And you have a company that's seen as the purest, fastest way to play that trend.
It's a fascinating setup, a real case study in how markets work.
It really is. Okay, before we go, I want to leave you with one final thought. We talked about blue sky territory. This zone with no map, no history.
The great unknown.
Exactly. When a stock gets there, it stops trading on what happened in the past and starts trading purely on belief about the future. So here's the question to chew on. How high is too high when you've thrown the map out the window?
That's the billion-dollar question.
Keep an eye on that $500 floor, everyone. It is a brand new world for SanDisk. Thanks for diving in with us.
Anytime.
Don't forget to like, share, and subscribe for more.